Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down, or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical, and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time. Using Q systems, you could. Why may you rank your buy candidates? Do you rank your buy candidates? It is not always required, but sometimes it can be useful. Why? If you have only one buy candidate, of course, ranking is not required. However, if you find multiple buy candidates, you may rank them in your order of preference. What may determine your preference? If you are a purely technical trader, you may prefer one type of setup over another. If you have found both breakout and pullback buy candidates and you prefer pullback setups, you may rank pullbacks as 1 and breakouts as 2. If you are a 360 degrees trader, ranking is even more useful. In 360 degrees buy candidates, you have the following: a technical low risk buy setup like box, bounce, flow, breakout, pullback, headwind, etc. At least one of them. An undervalued or high growth stock, a box stock, or a high dividend yield stock in terms of fundamentals. An industry that is strong or accelerating. Those are the minimum requirements. Note the OR conditions in each of those dimensions. What happens if stocks meet multiple of those OR criteria simultaneously? Won't you rank them higher? I would. For example, a stock may have a flow and breakout setup at the same time. A stock may be undervalued and high growth and even a box stock at the same time. It may be in an industry that is both strong and accelerating. The more of those or conditions in each dimension are met, the higher becomes the rank of the buy candidate. Seasonality is optional in Q trading. I always look at it before placing a trade. It takes me only a few more seconds to check that out using Q season. If everything else leads to a tie, I may prefer a stock with higher seasonality and rank that higher. The ranking is not required to be cumbersome, perfectly scientific, or extremely time consuming. A side-by-side look at the buy candidate's technical, fundamental score, industry score, and seasonality will help you decide the ranking in a few seconds. When may you carry out the ranking? After you have decided your buy candidates. Ranking is the last step before buying the stocks. You may use the ranking to buy some stocks and not the others when you don't want to open so many positions at the same time. If you decide to buy multiple stocks and all of them are moving up together, you may buy the higher ranked stocks first and then the others, while avoiding chasing the stocks if they are already up significantly. How do you easily remember the ranking choice? I keep the buy candidates on the Q Elite Trade Station sidebar with a blank line between the ranks. I do not go beyond 3 ranks and keep the preferred rank stocks above the others. Why the blank line? The blank line keeps the groups separate even if I change sorting by double clicking the column headers, sort tickers alphabetically or by percentage change, for example. I use Refinitiv Monitor 2 to track my buy candidates. The monitor helps track professional grade, not professional like, but professional grade news in real time. I like to watch my buy candidates for any news coming in. I track news on stocks and the market in general only from Refinitiv. I do not use any other news source. In Refinitiv's monitor, it is not enough to insert blank row between the different ranks. Instead, a header row is to be created. That way, changing sorting will not merge the stocks. As I use both Elite sidebar and monitor, I store the ranking information only on Elite. I use monitor for tracking news. If you are not using TradeStation, that is you don't have Q Elite, then you may use monitor for tracking news and also for storing the ranking information. It is not required to store the ranking information on both. I will illustrate later today using 3 buy candidates I tweeted last week how to do the ranking using Q systems. Greetings. I am Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets using only one trading system and techniques Q that I developed myself. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q Systems run on Metastock and TradeStation platforms. It has multiple components. I'll use many of them in today's session. Up to the charts. Let's start with dollar index. I have already marked the charts to save time. Let's go through the markings one by one. In the weekly, dollar index is at watermark support. Watermark support is there in daily as well. Watermark was created by a bullish headwind and a bull release signal that came at jump thrust low. If you watched my last market recap, you know that I was expecting dollar index to go up. It did not go up, it did not come down. it is moving sideways. Some of the trend line resistances were also there last week. Now there are two trend line resistances. If dollar index can break out of them, then that may put bearish pressure on the market. Leaders index. If the leaders break down, that puts pressure on the market. In the daily, leaders index displayed a bearish indecision cluster at watermark resistance. It was moving sideways, the range defined by watermark resistance at the top, trend line support and watermark support at the bottom. It displayed the bearish indecision cluster and bear release signal. On Friday, it displayed another bearish indecision signal. It is more likely than not that US dollar index will come down from here. The trend line support is some distance away. If it comes down, that will likely put pressure on the market. I expect it to come down, but there is no short setup yet. Wait to see if there is a short setup. If that comes, that may be a time to short the market, subject to other signals from different dimensions. What about mega cap index? This is mega cap index. Mega caps tremendously influence the market, more so on some pockets than others. What do we have on these charts? In the weekly, it displayed a bearish headwind reversal signal from which price fell down. As is often the case, it retested the watermark created by the bearish headwind, and this week it came down just about after just about touching the watermark resistance. The watermark resistance is there in daily as well. At that level, it created bearish indecision cluster, something that I always keep an eye on. And then on Friday, it displayed a bear release signal. Trend line support is some distance away. It may come down from this level because of the resistances and because of the bearish indecisions and bear release signals that have come. It is stronger than the leaders index. Why? Because it has higher low and higher high. Leaders index did not have that. So mega caps are stronger than the leaders, but it is not at a buy point. And as I am expecting it to come down, I'm not going to buy obviously, but there is no short setup yet. We may wait and see if a short setup appears. If that comes, that may be a time to short the market, subject to signals from other Q dimensions. If you look at the weekly, you can see mega caps as a whole went up. It did pull back from the top, creating an upper tail that is not bullish, but on a closing basis, it's clearer from the activity bar. Activity bar green means on a closing basis, the weekly went up. Though mega cap index went up, the specific mega cap on which I shared a bearish view in the last recap came down. Do you remember what stock was that? That was Microsoft. This is how I analyzed Microsoft in the last market recap. I explained how I bought it at the bottom, at the lower edge of the sideways move, and at which point it would be appropriate to book profit at the upper edge of the same sideways move. This is actually a slide I showed in the last market recap, highlighting the trendline resistance, the bear release signal, bearish headwind reversal signal, and projected a move downward from there. This is Friday 1 week ago, and this week mega caps went up, but what happened to Microsoft? This is Microsoft. As of this Friday's close, after the bearish headwind of previous Friday, it in fact came down. Q analysis provided effective, aka profitable once again, even though the overall market went up, QQQ went up, mega cap index went up, Microsoft as a shorting possibility resulted in a profit. Let's now move to market breadth, invaluable in assessing the internal health of the market and anticipating a change in market direction. Market breadth total view, broadest view of the market. There are many signals. I will not go through all of them. You may pause the video and read them. I will point to the times in recent days when the oscillator 3-month new high low had hit the extreme upper threshold, these two lines, and you may see that every time it hit the upper extreme threshold, price pulled back from there enough to give us a profitable swing short trade. And as of Friday's close, it is at extreme overbought. Every time it hit the overbought, earlier it came down and now it is at the extreme overbought level again. This is showing us that it is not time to buy in this market, at least not buy indiscriminately. That is the message from 3-month new high low from market breadth total view. Let's drill down from total view. Now we are looking at major indexes. As of Friday's close, the 3-month new high low is extremely overbought in Dow Jones Industrials, very close to being extremely overbought in Russell 2000, not there yet. Nasdaq 100 extremely overbought, S&P 1500 extremely overbought, S&P 500, S&P also extremely overbought. And in terms of the other valuable oscillator, percentage of stocks above 50-day moving average, S&P 500 is again extremely overbought, and so is Dow Jones Industrials. In fact, if you remember my last week's market recap, the status has not changed as far as the breadth charts are concerned, be it the total view or the major indexes. The message is same. It is not a time to buy indiscriminately across the board. If at all one wants to buy, one may look for small cap stocks, because small cap is the only pocket of the market that is not overbought. What about the composites? Let's look back again on the composites, Nasdaq and NYSE. Every time the 3-month new high low hit extremely overbought level, price came down enough to give us profitable swing short trades, and therefore now that NYSE is extremely overbought again, it is not a time to buy, at least not indiscriminately. Nasdaq 3-month new high low is not overbought yet. What does it mean? Nasdaq broad market is lagging NYSE. That is the same status as we saw in the last market recap. Nasdaq is not overbought, but NDX, that is Nasdaq 100, is overbought. That means small mid-cap stocks in Nasdaq and Russell 2000 stocks are not yet overbought. Those tend to be laggards in a market up move. Those are the two pockets you may look to buy. Small cap and mid cap stocks. Avoid mega caps, mega cap tax, and avoid also large cap stocks in general. That way you are buying from the pockets that are not yet overbought and avoiding the pockets that are extremely overbought. What is the market external view? We can look at the ETFs for that. I have the 4 market ETFs here using weekly interval, and you can see only IWM is negative. All the other ones are positive, QQQ being the best performer, followed by SPY and then DIA. IWM is the one that is down and the worst performer. Let's look at them individually. IWM, it is the worst performer this week. Did we have Q signals last week to anticipate that? Yes. Last week we saw that it was at this watermark resistance, then it created a bearish indecision cluster, and as of Friday's close last week, which is this candle, it completed a false upside breakout with a bear release signal. Bearish indecision cluster, false upside breakout with bear release. We would expect IWM to come down this week, and though other pockets of the market went up, other market ETFs went up, IWM did exactly what was expected of it. Looking at the Q charts, it came down little bit, and the preferred trading instrument in such cases would be short call vertical, and that would give us a profit due to time decay as well as delta benefit. What about Friday's close? If we look at IWM now, weekly is indecisive in shape, daily is also indecisive. It is not telling us anything about where it may move next. That was different last week. Last week it told us that the likely move was downward, but this week, as of Friday's close, it is telling neither to buy nor to short. QQQ is not the same. It is the best performer this week, and if you look back, it displayed a bearish headwind here, pull back, another bearish headwind, much larger pullback, and we have a bearish headwind on this Friday. Why would I not expect it to pull back again, at least a bit? I would expect that. As of this Friday, we have a bearish headwind, we have a bear release signal, we have a watermark resistance, and almost there to a false upside breakout at the watermark resistance. Trendline support is some distance away. Weekly shape is indecisive. What QQQ is showing today is what IWM showed 1 week ago. From that, we would expect IWM to come down. It happened, and following the same techniques, I would expect QQQ to come down. That would mean there would be a shorting possibility in QQQ as of Friday's close using the preferred instrument of short call vertical. Is there a short setup? There is no short setup yet. What is the trend? Because it has practically completed a false upside breakout, I'll say the trend is sideways. The upper edge is defined by watermark resistance, lower edge by trend line support. It is at the upper edge of the sideways range, and it has many bearish signals, no setup. If you apply the checklist conditions on weekly daily, there is no headwind or box short setup, but enough signals are there that my preferred trading direction now is bearish for QQQ. But there is no short setup yet. If it starts to come down, then I expect the market to give other short candidates as well, but not yet. SPY, this week it went up slightly. However, it has displayed a bearish indecision at the top in weekly, bearish indecision cluster in daily, and bear release coming on Friday. Trendline support is far away. Looking at these signals, I am expecting it to come down rather than go up. Why so? Because if it goes up, I will not have any easy buying opportunity. I would rather it come down, and there are some bearish signals at the top, though there is again no bearish short setup. This does not allow buying, does not allow shorting yet. We may see what it does next week. If it comes down along with QQQ, probably both are heavily influenced by mega caps, there will be more shorting opportunities, but not there yet, not ready to short yet. The last of the market ETFs, DIA, last week it already displayed a bearish indecision cluster. This week the weekly went up slightly but closed with an indecisive shape candle. Indecisive cluster is there in daily. There is a bear release signal, and on Friday there is another bearish indecision at the top with a very bearish shape candle. And as far as this watermark is concerned, it has practically completed a false upside breakout that is bearish. Trendline support is far away. What is the trend? Of course, it is in an uptrend with higher low and higher high, but it is too extended to the upside, and there are plenty of bearish signals. So much so that my preferred trading direction is bearish, but there is no short setup yet. If it comes down along with probably QQQ SPY, that will put pressure on the market and that will give many shorting opportunities, but not there yet, not there yet to start shorting. Let's move to bucket analysis and sector industry stock breadth analysis using QEdge helps to decide preferred trading direction that may be different from the current market trend. Bucket analysis. 71% of stocks are above mid-Bollinger Band, that is bullish, and the distribution of the stocks across different buckets has no signal. It's neither overbought nor oversold, it is bullish. Allows buying, doesn't allow shorting. Sector industry stock breadth. This week's breadth is bullish. So is the longer term 10-day period and 1-month period. So is the shorter term 2-day period and 1-day period. Bullish across the board but not overbought yet. It becomes overbought when most or all of these graphs hit 80% or above. It is not there yet. It is bullish, allows buying, does not allow shorting. Technical breadth, invaluable in deciding preferred trading direction from breadth charts, and then find unambiguous technical setups for individual stocks. Weekly technical breadth, all setups bullish, strength setups bullish, continuation bullish, reversals bearish, but absolute number of reversals are far less than absolute number of bearish reversals, far less than the bullish strength and continuation setups. Therefore, overall, weekly technical breadth is bullish, allows buying, does not allow shorting. Daily technical breadth, often it tells us first about a market direction change and helps us take the trades in that direction ahead of others. It is immediately actionable. Here the picture is different from the weekly interval. Weekly was bullish, but daily is neutral as far as all setups are concerned. Strength setups bearish, reversals are bearish, and here, unlike in the weekly interval, the actual number of bearish reversals are comparable to the bullish strength and continuation setup. So reversals are bearish, trend continuation more bullish than bearish. It has a mixed picture. There is also a headwind alert that is bearish. This allows both buying and shorting, and because of the reversals being bearish and there being the headwind alert, there may be shorting the top opportunities. You may also see that many of the bearish setups are coming at price extreme high. If you combine the headwind or other reversal setups with the stocks at price extreme high, you get lucrative shorting opportunities. Appropriate instrument may be short call vertical for those trades if options are liquid. Though it allows us shorting, buying is preferred if we look at all the different dimensions. Where to look for buying? If you are fishing, you will probably go to a pond with most fish. If you are looking for buying stocks, then you may go to the bars which are most bullish. In this case, look for flow setups and breakout setups. You could look for the other setups, but those are much less in number, so it will be easier, quicker to find trade setups from flow setup and breakout setup, and even better if you get a setup, get a stock that has both flow and breakout setup. If we have time, we may look for a stock like that with both flow and breakout setup this week. Buy candidate. Market level summary allows buying, preferably small and mid caps, avoid mega caps. maybe avoid large caps also. May consider some shorting at the top, but buying is preferred. Review of last week's trade ideas. There was only one stock that I shared in the last market recap, and that was a shorting candidate. That was RIVN, Rivian. What setup was that? Technically, it was a breakdown short setup. This was the day, and as I explained, the perfect time to short it would be right at the point it broke below the trendline support. By doing that, you would already have a significant profit by the close of the day. I mentioned in the last market recap that it could be shorted this week, but one thing to keep in note would be this long candle, which would mean stop to be further away. What to do in such cases? Instead of taking that much risk per share, because the stop would be far away, one efficient way would be to use the precision entry chart template, that is 5-minute interval in the morning session, 10-minute in the afternoon session, to try to short it one of the days this week. And that is what I did. I shorted it one of the days, and using precision entry template I could short near the high of, I don't remember, either Monday or Tuesday. And then price came down. Because I used precision entry techniques, I had enough profit in the trade relative to the risk, and I booked profit in the trade. Now, why did I book profit in the trade? The market went up. We'll see soon. I will show Tesla, a stock in the same industry, electric vehicles, went up significantly, but this did not go up. I closed it. It is, of course, underperforming the market, underperforming Tesla and other stocks probably in the peer group, but I booked profit. And one reason I booked profit was what I saw from Refinitiv, my source of news, sole source of news, reliable news, that there was an announcement from the USA government that may practically bar all Chinese electric vehicle sales in the USA if it comes true. That news resulted in me closing the trade with a small profit. When I saw the news, I did not wait, I'll close the trade. And if you look at Tesla, let's go to the weekly daily, a stock in the same industry group, Monday, Tuesday, Wednesday, Thursday, Friday, steadily went up. Look at the weekly candle. Large open up, almost like a gap up, little short of a gap up, open in the weekly, and steady move up, a huge bullish candle. In the backdrop of that, Rivian struggled. Remember Microsoft? Market went up, mega caps went up, but Microsoft had a bearish setup, as I shared in the last market recap. That worked out. That trade gave us profit. The exact same thing happened in Rivian. Market went up, EV stocks went up, electric vehicles, Tesla went up heavily, but Rivian came down. Once again, it shows the value, aka profitability, of the 360 degrees technique versus only taking technical trades. Why my success rate? It seems from the posts I share publicly before knowing the results on Twitter and YouTube, I would say that it seems my success rate is higher. And if you asked why, I would say the reason is because I am doing this 360 degrees analysis before deciding on my trades. And I'm ranking them also before entry, as I explained. That was today's topic. What was this week's topic? Ranking buy candidates. And of course, the same approach can be taken for ranking short candidates. Let me go through the buy candidates. I'll use 3 stocks as example that I shared on Twitter. My Twitter handle Superior Profit. This week I shared 3 bullish ideas. One was on RPD. I shared it on September 27. Another one was on STAA. Shared it on September 27. And the third one was GT, also shared on September 27. So these 3 would be buy candidates as shared on 27, and because it is the same date, it would be appropriate to try to rank them, covering today's topic. Let's look at them one by one. Let's look at them technically and see why I would consider buying them, or rather I would look at the charts I shared on Twitter. Let's go through the charts as of the time I tweeted them. That would be more appropriate instead of looking at today's charts. GT, let me draw again. Let's read the chart. GT came to jump thrust low, price extreme low, and gave a big move up 3. A very lucrative pattern. If a buy setup comes after that, almost never fails, provided it is in a fundamentally strong stock as per Q Vital scorecard. So I would look to buy this stock from this pattern onwards, and you know that I like that pattern. There was a breakout long setup on this day which also had a bullish flow setup, not only flow signal but also a flow setup. The next trend line resistance was far away, so technically I would rank it very high. Technically it's a trade I would like to take immediately. So GT technically very good. Let's look at STAA. This is the chart I shared on Twitter on the same day as GT. It had a bullish headwind, almost like a miracle. It came all at the very bottom, or at the this is the lowest candle of the down move. Since then, I would look to buy. The buy setup came on this day. In fact, the buy setup came on the same day that GT gave the buy setup. It had a breakout setup. It also had bullish flow, and the trend line resistance was far away. Technically, I would be happy to take this trade. There would be no second thought in that. As good as GT. However, GT had that pattern, jump thrust low, price extreme low, big move up 3. So GT I would rank slightly above STAA for buying. But both I would like to buy. This is becoming a case where there are multiple buy candidates, and that's when the ranking is useful. I would like to buy both of those stocks based on the charts I shared. And then RPD, these also had the pattern of GT, jump thrust low, price extreme low. Then came big move up 3, one after another. That stabilized price. Along the way came bullish headwind, stabilized price. And on this day, in fact the same day that we had breakouts in GT and STAA, RPD also broke out. But this chart is different from GT and STAA in one way, is that there are many more trend line resistances. So I will rank it lower than GT and STAA. So as far as technicals are concerned, I would rank GT number 1, STAA very close to number 1, let's say number 2, but very close to 1, and RPD being the last one because it had many trendline resistances. Then I would look at their fundamentals. Let's look at their scorecards. Of course, I would do the analysis one stock at a time. So I would calculate the one-page scorecard of GT using Vital, and I would see that it is a buy candidate. I'm not reading the scorecard now. I would do the same thing for the other stocks. All those will be individually selected as buy candidates. Now, before deciding the ranking fundamentally, I would create their scorecard together so that I can see them side by side. Let's generate the scorecard. And here I am generating the scorecard for all the 3 buy candidates together. Now in real life, unless you have 10 or 20 buy candidates in a day, if you have just one node ranking is required. If you just 2, 3 or handful like that, you don't need to create the scorecard table. You would remember the scores in mind probably to decide the ranking. But here for illustration, even though I have only 3 buy candidates, only not really in a day entering 3 new trades is not only in that way, but I have 3 buy candidates. I will show the ranking how easy it is to do using the scorecard. The minimum requirement for fundamentals is to have either undervalued stock or high growth stock. Now all these 3 are high growth stocks. That's good. And 2 of them are also undervalued. STAA is not only high growth, it is also a box stock. So from growth value box stock perspective, all of them are similar. It doesn't have to be 100% scientific. Don't have to make any rule on that. Just look at the color coding and you decide that they are more or less equal. And when there is a tie in terms of fundamentals, we may look at the seasonality. Let's calculate the seasonality of the 3 stocks. Using Sysyn to retrieve data from Refinitiv. While it is retrieving the data, I would also go back to the 3 stock scorecard and look at their industries, because ranking has some influence from the industry scorecard as well. Let's look up the industry scorecard from QEdge. GT is strong industry, so is STAA, that is healthcare supply. STAA is in healthcare supplies industry, GT is in tires and rubber, and RPD is system software. So in terms of industry, GT and STAA are stronger. And in fact, STAA is not only strong, it is most accelerating. So STAA I would rank as number 1, then GT, then RPD. Now, though I am explaining it like that, all of these happen in mind. We don't have to make it so scientific. Just looking at the scorecard, we know which one we would like to buy if we wanted to buy only one. So here RPD has less preference, STAA is higher preference, and GT is in the middle. And if I go back to seasonality, only GT has strong bullish seasonality in November. It's more than a month away, about a month away, but that is useful. Now if I combined it in my mind, this is how I decided based on the chart pattern, industry score, fundamental score, seasonality. I decided GT to be my rank 1 buy candidate, the highest category. Rank 2 was STAA and then was RPD. And you see, I placed one blank between the three categories of stocks. Let me delete Rivian. And therefore, if I double click the column header here or here, here or here, sort by ticker or sort by percentage change, the groups remain intact. I don't have to create any header label. I know that the blank space indicate different ranking, and the highest ranking I put at the top. By the way, if you look at the stocks, since I shared it, RPD, it went up. It was a breakout candidate. GT also went up, and STAA also went up. STAA went up the most. Now I actually ranked GT as number 1, but STAA went up the most. That is fine. We never know the future, which one will go up faster, and we have to also understand the industry, which industry stocks move more. I don't rank my stocks based on that which one is likely to move more. I just rank them based on the analysis, and GT is a tire related car tire related industry. Of course, it moves slower than STAA, which is a healthcare health technology or healthcare related stock. So when they may move more than tire companies. And RPD stock could move more. The chart pattern was not as good as the others, but I did take a buy position in all of them, and I am holding all of them. That is how I ranked them, and I traded all of them. I entered a buy position in all of them last week. That was this week's theme. What about this week's trade ideas? Let's try to look at least one stock this week. What am I looking for? I'm looking to buy. Buying is more preferred this week for me. Looking for which stocks to buy, I'll use the market level analysis to decide that. Market level analysis told to look for small or mid cap, and in QFinder we saw more buy candidates in breakout or flow setups. So I'd like to look for either breakout or flow setup in small or mid cap. Personally, I like to buy stocks at a lower price level, that is price extreme low, maybe price extreme middle. I try to avoid buying price extreme high. I may start my investigation with price extreme low stocks. That is a personal choice. It is not a rule, not a guideline in Q. Q allows buying at all price extreme levels. So let's do the analysis with live systems. Start with, let me close one program I don't want to use anymore today. Let's start with Finder. Go to the bullish buy candidates. Look for the price extreme low stocks, starting with thousands of liquid stocks on which I ran Finder. I am left with only 20 candidates, and I'd like to look for flow or breakout setup. I in fact see that there are only 3 stocks that are giving both flow and breakout setup. Remember ranking, the more we have, these are all OR conditions, but the more we have in our favor, the ranking goes higher in our mind. Doesn't have to be very scientific or mathematic about it. Why I'm doing like this, I am also doing the ranking when investigating trade setup. So I'm starting with these three stocks first: IONQ, VAL, and YELP. However, I see even before proceeding any further that IONQ went up by 20% on Friday. I'm not interested to look into that stock. The stop would be far away. So I am left with only two stocks. What are these stocks? They are at price extreme low. They are giving both flow and breakout setup. And in terms of pattern, YELP also has a fan out pattern. Ranking wise, therefore, even before opening the charts, because of the fan out pattern, ELP is slightly better than VAL. Let's carry out the fundamental analysis now. See, though I explained ranking step by step, as you can see now, when I am doing the 360 degrees analysis, ranking is already happening in my mind. Two stocks, let's look at their scorecard. ELP undervalued, VAL is not. Both of them are high growth stock. ELP has much better earnings quality. There is some fund accumulation that is not there in VAL. So fundamentally, I would prefer ELP. Technically also, so far before looking at the charts, ELP was preferred. And let's look at their industry scores from QEdge. I didn't open the charts yet. See how I am shortlisting the stocks efficiently. VAL has a better industry score and acceleration, but ELP is also perfectly okay to buy. In terms of industry, I would rank ELP, that is interactive media and services industry, number 2, and I would rank VAL number 1. Both of them seems to be good buy candidates, and now I'm going to look at them using technical charts. First, I look at them using daily. If it looks attractive, then only I open it using weekly daily to confirm the trade setup that is also low risk candidate. This is ELP. I like it instantly. Let's look at VAL. I like VAL also. So now is the time to look at them using weekly daily. Let's do that. VAL, Valaris. The daily is appealing, but the weekly is not. Weekly is very indecisive. Let's see if Yelp gives a better weekly daily. I like Yelp. Yelp weekly is more bullish, not indecisive at all. Backdrop color turned bullish for 3 weeks now. Had a bullish headwind earlier. Has long-term trendline support in weekly. Has long-term trendline support in daily. Just breaking out of the trendline resistance in daily. Yes, there is a trendline resistance in weekly also, but if it can go up next week, cross the high of Friday's high, I am expecting it to also break the watermark resistance. And I didn't take any long trade in Yelp on Friday. Even if I found it near the close, looking at the trendline resistance being very close to the closing price, actually it has a breakout, but closing price is very close to the trend resistance. I would wait until Monday to see if it can go above Friday's high. So if that happens, then I would not mind buying the stock next week, provided of course the market is also looking all right on Monday and Tuesday, when and if Yelp continues to go up. So that would be my buy candidate for this session. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today. probably quite a few of them, just as you would almost every other day. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend. And as I always say, as these live sessions and my tweets and my forum posts on my website, I'm quite confident shows there is no reason not to do that. Trade profitably. Thank you.